Author and investor Jim Rogers joins me now from Singapore. Jim, thanks so much for being with us.
I'm delighted to be here, Daniela. Good evening. Good morning to you, I guess.
Jim, let's start off by looking at two news items we saw emerge last week. First, Deutsche Bank launching a new safe deposit in Singapore capable of holding up to 200 tons of gold, and China approving two domestic exchange-traded products backed by gold. Both of these products emerging in your neck of the woods, Jim. What do you think of the emergence of these products? What is the message it sends about the appetite for gold?
I am in that side of the world, and Deutsche Bank has opened a new gold depository in Singapore. Several people have opened gold depositories in Singapore for a variety of reasons. Many people want to get their gold and assets out of Europe and out of other places. As far as China is concerned, yes, there is a huge appetite for gold in China. There has been for some time. I suspect China will soon bypass India as the largest buyer of gold, partly because Indian politicians are doing their best to prevent people from buying gold or to limit the amount of gold.
Jim, happy you brought up India because, yes, indeed, their finance minister repeating his appeal to the public to curb their appetite for gold. He says that heavy gold imports hurt the Indian economy by widening the current account deficit and pushing down the value of the rupee currency. What do you think of the finance minister's point of view, Jim?
Well, politicians always try to find somebody to blame, Daniela. It's the press or foreigners or somebody they always find. And in this case, India's two largest imports are oil, which they can do nothing about, and gold. So they're blaming all their problems on gold. The politicians should resign. It's their fault that India has all these problems. But they're doing their best to cut back or limit the demand for gold. And they said just last week, there are going to be more measures coming if the demand doesn't go down. So this is one of the reasons that the gold market has been weak. France, by the way, is doing the same sort of thing. Germany, I mean, this is absurd. Politicians try to blame other people.
Jim, let's talk gold price now. And before you say if Kitco doesn't know, who knows? We did speak back in December, and you said you weren't surprised that gold was trading sideways since it had been since 2011, and you weren't surprised to see the metal correcting. We're now speaking today after April's gold sell-off. What are your thoughts on the metal?
Well, Daniela, Kitco may not know, but Daniela knows. I know Daniela knows. Well, as I said then, I'm not the least bit surprised. It's good for gold that it's had a big sell-off. It has not had a proper correction for 12 years. Anything that goes up for 12 years in a row is an anomaly. And so thank goodness gold is finally correcting. Otherwise, it could have wound up in a huge disaster. I would suspect that since there are now so many people terribly bearish on gold, that gold's okay to buy. I bought a little bit, not much. If gold goes up, I've got plenty. If it doesn't, if it goes down, I'll buy more. So I suspect that at least it's forming some kind of bottom here because there's so many bears now. It's astonishing how many bears came out of the woodwork so quickly, but there are lots of them.
Speaking of bearish, Jim, what do you think of economist Roubini's statement that he sees gold at $1,000 within the next 2 years?
Mr. Roubini has never been right about anything. He was right once, but even then he was right for the wrong reasons. So I don't pay any attention to Mr. Roubini. He doesn't know much about gold, I'm afraid. Mr. Roubini is pounded the table saying gold would never get to 2,000. Well, it got to 1920, which is pretty close. So if you're going to get advice, it's better to get it from Kitco than from Mr. Roubini.
Jim, let me ask you, you've said in the past that if gold were to go down, you would buy some more. It obviously went down substantially in April. Was it enough to get your attention?
No, I bought a little bit of gold. I bought a little bit of silver. Of course it got my attention. Of course, when something goes down 30 or 40, 30% in a few weeks, of course it gets my attention. Yeah, I even bought a little bit. Not enough to be significant, but I bought some.
Are you liking platinum and palladium, Jim?
I do own platinum and palladium, yes. I own more gold than I own platinum and palladium, but I certainly do own them, yes. I'm optimistic about both, especially given the situation in the producing countries for platinum and palladium. Zimbabwe, South Africa are not doing terribly well right now. They might get better, but they might get worse.
Jim, are you paying attention to the pressure that emerging market currencies are facing? Is this bullish for gold?
Well, whenever there is pressure on currencies, it is good for real assets, whether it's silver or rice or gold, whatever it happens to be. And yes, when people see their currencies being debased or deteriorating or declining, they want something to protect themselves. And obviously gold is the easiest for gold or silver are the easiest for most people.
All right, Jim, before we part ways, final thoughts for investors.
Well, governments seem to be down on gold. As I mentioned, Germany and France are taking measures to limit the purchase of gold. India certainly is, but if anything, if it goes down more, I would be buying more, Daniela, rather than, I'm certainly not selling my gold, because in a few years, gold will be much, much higher. It's the first time in recorded history, Daniela, that you have all major central banks debasing their currency by printing money. So don't sell your gold.
Jim, always a pleasure. Thanks for being with us.
My pleasure, Daniela.
And thanks for watching Kitco News this Monday. We'll have more for you in the week. You can email us in the meantime and use feedback at kitco.com or tweet us at Daniela Cambone. Thanks for watching.